From the morning reading, SPX, INDU, Spider, Diamonds, XLI, and XLY make all-time new high close. 7 of 9 sectors moved higher on Tuesday. XLE, XLB, and XLF were the strongest sectors, while XLU was the weakest sector. Oil futures rose $2.07 to close at $46.62. Breadth strengthened compared to the prior day as advancers led 2139 to 878 on the New York Stock Exchange and led 1860 to 737 on the Nasdaq. XLK made a 15-year new high close. On the S&P 500 snapshot, we have another record close. Major equity markets around the globe continued to rally, except for the post-Brexit FTSE. The benchmark S&P 500 surged at the open, regressed a bit, and then drifted higher to a narrow afternoon trading range that included a 0.85% intraday high. The session closed with a trimmed gain of 0.70%. But of course, any gain ensued another record close. The yield on the 10-year note rose 10 basis points to close at 1.53%. And in other reading, rebound in global market bond yields and British pound accelerate risk-on trade as gold and yen sell off. Emerging markets achieve a bullish breakout. So do all country world index iShares, and the New York Stock Exchange Composite Index breaks through the neckline with help from smaller stocks. Energy and materials surge on stronger commodities. Financials and transports also turn up. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 5:58 a.m. Mountain Time, and I am recording this in preparation for the market day of July the 13th, 2016. Remember that on YouTube, you can have a free subscription to the channel and be alerted to new content being published. Give the video a few minutes after being published for the video to be available in high definition. Click on the setting button to choose the high definition playback button. In the same area, you can also control the speed of the playback. I routinely find that I can fully understand videos at about 1.5 times the recorded speed. Also note that full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and bounce into the overnight for our morning report. And at the time of this cut, everything was positive in the 4 broad market U.S. indices, albeit relatively low grade. There's less than 1 point on the S&P. We're up about 1/3% on the Russell, about just above scratch on both the Nasdaq and the Dow. Crude oil is down about 1.1%. Euro's up just above scratch. Bonds are up about 0.5%. So that's the major move of the night. And then gold is up about 1/3%. In overseas action, all positive, though not particularly robustly. China up about 1/3%. Hong Kong up about 0.5%. Japan up about 0.8%. Germany up just above scratch, as is the United Kingdom. And macroeconomic reports for today of note in the United States. You have crude oil inventories on a regular weekly schedule. And you have the 30-year bond auction. So you bond traders need to pay attention to that. And then looking forward to tomorrow for the U.S., you have PPI, the weekly version of the unemployment claims, nat gas storage to wrap out the day. In current volatility, we dipped a little bit yesterday, just on the VIX, went just barely for a few moments below 13, but then quickly moved back up. But still very, very low volatility right now. Short-term VIX is at a 12.25, skew just above the warning stage at a 126.1. In terms of IV percentile, you have on the S&P a 7, the Russell a 12, the Nasdaq a 7, and the Dow a 3. So 3 of the 4 indices are in single digits. Should tell you some and give you some perspective as just how low current volatility is. We did put in standard deviation moves on 3 of the 4 indices yesterday. Only the Nasdaq failed to move up by a standard deviation move. So pretty big moves, continuing to confirm this breakout and rally that we have experienced in the last couple days. In terms of the charts, let's go ahead and go to the charts. And we see in the overnight action, albeit at the time right now, it's still small. And we are still positive, though, from yesterday's close. And, you know, this is kind of piling on again to the breakout move. We have clearly put some distance now from the area of resistance that we have so famously talked about for so long. And if we should come back at this point and come back into the prior range, you know, that can still happen. That's the primary question. But you have to say that at the very least, we have established by all definitions an extension of the bull market by, you know, some, let's see, July, by some 14 months, the bull market has officially been extended. We've got on all these setups, whether it's S&P futures, SPX, SPY, we've had new closing highs that are above the prior ranges. So those things have all been resolved. Now the question is where do we go from here? Do we actually build on this breakout and continue? And given the amount of energy that was pent up at this level, it's hard to believe that we don't make some progress towards building a bullish leg in this area. Now, whether that happens after a bit of a retracement, remember about 70% of the time when you have a breakout, you get a short-term retracement that comes back and retests that former area of resistance, now hopefully support, and then continues to leg on. So let's watch for that action. That's very, very possible. And where does that support come in? Does it come in at the former resistance, or does the market break back down into the former range? That's the big question that we're going to be watching as we go forward. We'll take a quick look at the SPX version of this. This is, of course, your all cash participants. A clear breakout there. Of course, no Globex activity, no overnight activity there to show being this is all cash. And then also the SPY. So whichever version you like to watch, this is clearly a breakout, clearly new highs being put in. Let's see, the Dow futures. Clear breakout here as well. Now, it changes the story a little bit when we get to the Nasdaq. Now, we have a clear diagonal resistance breakout on the Nasdaq. And you note that currently we're up against this horizontal resistance of the last major swing high. Obviously, we already took out this one, but we're right up against this one. So that seems to be showing some resistance value at this moment. But we'll see how long that lasts. If the broad market continues to move up, we'll probably see the Nasdaq muster up through this area. If it gets through this area for the Nasdaq, technically, that probably opens us up all the way back towards the former all-time high area. Now, we probably would have an area of resistance that we would paint on this one between about 46.95 and then the 47.40 area. So the Nasdaq's got some work to do to come back up and establish its new all-time highs, but it certainly seems to be making some progress. Now, the Russell, of course, also had a similar story as the Nasdaq, and in being behind the Dow and the S&P, also broke through diagonal resistance, has come up to these former swing highs, seemingly has run into some resistance there. If it should break through that, we probably see it make a move towards the area of resistance at its former all-time highs as well. So these two, the Russell and the Nasdaq, are performing very much in tandem and a little bit lagging to the bigger S&P and Dow, but yet at the same time, clearly on their own, making bullish breakouts, just not quite the same grade as you would have to say with the S&P breakout, where you've got, an all-time high and a clear breakout that's been confirmed. So let's take a look at volatility. Here's your VIX, and you see we've been toying with this floor, and we undercut just for a few moments. I was looking to actually put on some volatility trades and missed this. And we continue to just hover just above the 13 area. So volatility very, very, very low. In terms of crude oil, we've been watching to see how crude oil behaves, and indeed we did have a return back into the former range. So right now it's nullified this little breakdown back into the former range. We'll sit here and watch where this goes from here. Does it start to behave more like it's in this ascending triangle and resume that pattern, or is this just now a new channel where we're getting lower lows and lower highs, and that's the dominant pattern? So right now, not terribly clear as to which pattern we probably should pay the most attention to. This certainly undercut and greatly weakened the value of this ascending triangle. But the fact that it, relatively quickly, I would have liked it to have done this perhaps a day earlier, perhaps even two. But, 1 or 2 day undercut and then get a nullification is one thing. This one took a little longer than that and took the 4th day to come back and retrace that move and come back into the pattern. So I'm not sure right now what to make of that. We'll continue to watch that, but still interesting that crude oil has moved back up, and that would seem to be in support of the equities, and that crude oil had been in a very tight correlation with its bullish run with equities prior to that. Now, they don't always move together, and indeed one could argue that higher crude oil prices is poor news for many of the equities, but of late we've seen this high correlation, so we'll see if that resumes or not. In terms of gold, safe haven status, it's been breaking down, so we're seeing a little bit of a bounce in the overnight, so we'll see where this continues to go. But if this is really going to be a strong bullish equity leg, you would expect that money would start to come out of gold and out of bonds and move into these higher sector areas, more risk on sectors of the market. And indeed in the stubs, where we've got the staples, XLP, and XLP really hasn't given up much. XLU, of course, was the weakest sector yesterday, but also in a big picture hasn't given up much as of yet. And then you also have telecom. I always forget that one. Let's see. Well, we can show this one on the other sector rotation chart. But if we're going to start seeing these bonds and so forth give up asset value to have the money to flow into these higher risk on areas, we should see this reinforce what's going on in equities. Now, right now, bonds in the overnight's been making probably the strongest move, while equities have hardly moved. The bonds have made a little bit stronger move as a percent up. So that move down yesterday seems to be being retraced. Now, it's retraced about half that action from yesterday. We'll continue to watch and see where that goes as well. And you see this on TLT as well. You had the gap down with the cash ETF. And that, of course, will start to move again once the market opens. So I think that's probably enough on the charts. Let's go ahead and go to the daily report. Not a lot of changes in the daily report from yesterday's session. You do have, of course, as you start to clear all the warning signals and go to a kind of normal settings or bullish settings, as long as we're in a bull trend, these things will generally stay pretty much the same. Right now, we do have the market phase opinion is phase 2. That's a bullish phase. The three market timing signals are all pretty strongly bullish. IBDs at confirmed uptrend. GMI index is 6 out of 6. Buy signal since 7-1. Then the third one, the stock charts decision point scoreboard, is bullish across all the indices on the short to intermediate term, with a mixed signal on the long term being the last set of signals that we need to see resolve to the bull side. Position sizing opinions remain at 100%. The intermediate term market postures for all four are very strong. We have all four now in the severely strong camp, all four above 80 at this point. Now remember, as long as it stays above 80, even if the number starts to drop a little bit, it's still severely strong, and it can oscillate and stay there for a very long period of time if it wants to. So right now, that's as strong as it gets, essentially. The strength of the trend also considered strong, well up over 80, and staying there on this indicator as well. In terms of strategy opinions, no changes from yesterday. We're still staying with the position of scaling into new positions, adding new positions a few at a time as you build confidence in this new bullish breakout. Don't put a pile of stuff all on at one time. You might even see a retracement back to the former resistance. It'll give you an opportunity to perhaps sell some puts, especially in those positions that you'd like to leg into. So build the position over time as you build confidence in this leg. Don't just all jump in at one point. In terms of specific warnings, we see in the volatility area, we have had a change here. We'd had the volatility ratio kind of fire in that it was in the setup zone. That is now fired in terms of signaling that we could have some increased volatility in the short term. So we're now looking for that. It not happened as of yet in the Globex activity, but this is telling us to look for increasing volatility in the short term in the very near future. Skew also just barely in the warning area. So that's the other volatility-based warning that we currently have in a fired position. There are no warnings in the trend-based group, and in fact, you could say, it's got confirmation to the bulls. New York Stock Exchange yesterday, new high, new low when the 1 month, 820 on the bulls versus only 9 for the bears yesterday. Also, here's another important change. The key intermarket risk aversion indicators went all 5 to risk on. So I still have this as hedge warning status level 1. If we hold this action today with these 5 intermarket risk aversion indicators now going as risk on, and really 2 minor warnings here, and only the some of these long-term signals still showing as a bearish stance, I might drop this to 0+ on the hedge status. We're really, really close. We could go either way and not be wrong, frankly. You'd like to see this stacked with all the same color signals all the way across all the different time frames to be able to call it a normal market risk condition. We're not quite there yet, but we're certainly getting very, very close. And frankly, you could argue if we got all these to green that I should be at a hedge risk level 0. So I probably will go to 0+ with tomorrow if today is a relatively benign market day for the bulls. In terms of sentiment, we do have a bit of short-term risk escalation for the stocks. Bonds and gold also at relatively high sentiment. And then you see the ETFs here that are at very high sentiment. Watch for reversal patterns in all of these markets. remember, you can stay in high sentiment for prolonged periods of time. Fear and Greed Index actually built on its score from the prior day, went from 81 to 88 with yesterday's activity. So this is clearly getting into the extreme greed area and getting up into some of the highest scores that we've seen in 2016. So that generally doesn't last very long before you see a retracement in the market and things start to ebb off, if nothing more than just to form a bull flag and give a bit of a short-term retracement, ebb off some of that exhausted buying pressure, and kind of reload. In terms of telecom, that was the one I was looking for, IYZ. That symbol never really pops in my head very well. But the stubs, watch the performance of the stubs. Telecom, the utilities, the TLT with your long bonds, and consumer staples, XLP. Watch those four versus these higher beta areas. And you see the ones that are higher beta: industrials, financials, energy, materials are your higher beta areas. If this bull market is to start to build some really significant strength, you will see those four high beta sectors start to take off and some of this money start to rotate out of the stubs. In terms of yesterday's performance, we certainly did see that. You see down here at the bottom, utilities, consumer staples, telecom, all down here negative, actually gone negative for the 5-day trading period on 2 of those 3. And then up here at the top, what are they? They're high beta, risk on type of sectors: energy, materials, financials, technology. I think we had on technology a new 15-year high at one of the morning authors mentioned. So this is the kind of behavior that you expect to see in a strong bullish move. So we'll see if this starts to build. Okay, that's enough for today. We've up over 20 minutes, just barely, but we're going to wrap this thing up. And disclaimers, as always, hit the pause button if you need more time to review the disclaimers. And then, of course, down here at the bottom, you see the hyperlink for the full set of disclosures. Read on at your pleasure. Of course, in the meantime, we'll be back here for the next session of the Falcon Global Market Preview. In the meantime, manage your risk. If you manage your risk, everything else will fall into place, and you'll have outstanding trading